All right, good morning. It is Monday, August the 19th, 2024. We hope everyone had a nice weekend. Good a haircut since the last Monday video that I was on here. It had been, I don't know, I think close to 3 months since my previous haircut, which that's a long window for me. I actually was kind of like, maybe going back to the hockey days, but then my wife reminded me. Caitlin was like, "You don't play hockey anymore. This mullet that you're rocking, like it's not working. You need to get a haircut." So she won on that front. But now that it's shorter, like it does feel good. Particularly in the summer, right? It's obviously very hot here, and so yeah, it feels good to have a little haircut. Nice way to kind of start the week. Reviews start next week, so fall reviews. We are really excited. So a week from today, next Monday, we kick those off. In terms of our team, it's like we say a lot. It's our favorite times of the year. Catching up with many of you, hearing how summer travel went and families, and we're really excited. So we've been preparing a great deal for those. Ready to go next week. Looking at markets last week, really strong, kind of a rebound week from the week prior, of course. Coming off of some really disappointing employment data. You saw markets a couple weeks ago correct a decent bit, which is, again, like I said, and it's always healthy. In my opinion, it's always really healthy to have those market corrections. It shakes out a lot of the kind of more speculative traders. It shakes out a lot of the amateurs that are just watching CNBC, making poor investment decisions. But and then a really nice rebound week here last week. And if you look at the economic data, there's clear reasons why. Okay, so almost in terms of like where we are in the market cycle, last week's economic data was almost perfect, if I can say that. So it started with we had two inflation pieces of data. So it started with the PPI, which that's the producer price index. So what producers are the cost for them to produce goods came in. So that number came in below expectations, which is a good thing, right? 2.2% was the rate of change there, right? And I said this before, but so the PPI, that's always an important number to look at, because many times that's a leading indicator to the second inflation piece. So CPI, right? So that's consumer price index. That's what consumers pay. So to see the producer price index below expectations, that's encouraging for like future months. The CPI for July year over year, so 2.9%. Was the number there, which was also a touch below expectations. Again, but that's a good thing, lower than expected. 2.9% is the lowest inflation reading in about the last 3 years. Okay, so that's good. You pair that encouraging inflation data with some of the really poor employment data that we received the week prior, and it almost certainly guarantees the Fed will indeed cut rates for the first time in a long time in the September meeting coming up here next month. So we'll see. I think it's just about a guarantee, though, with the inflation now below 3%, with, again, employment data becoming more concerning, which is exactly what you would expect with rates as high as they have been for as long as they have been, right? It's going to be employers. It's more difficult for big corporations and things to continue to be able to find profitable projects, things to invest in. So yeah, we'll see. So I would almost certainly expect that Fed rate cut next month, and then kind of the last piece of economic data. So on Friday, retail sales were stronger than expected, which was also a little bit surprising. So again, I don't think they're going to pull it off, but last week's data, if you just look at last week, it's like maybe this so-called soft landing is possible. Like, again, I don't think it'll happen. Yeah, I think there's a better chance the employment data continues to get worse, and the Fed will have to cut rates a little bit more aggressively. That's what I just think that's going to end up happening. But again, really nice that the Fed has rates this high. A lot of rate cuts they have in their back pocket. Should they need to, as the economy continues to slow. So, questions, comments, concerns? Please don't hesitate to reach out to our team. Again, really, really excited to visit and see many of you in the weeks ahead here. So we hope you have a nice week. We'll talk to you soon. Thanks.